Good morning, everyone. Welcome to Admiral Markets. We're going to take a look at the live charts here together in this webinar. So looking forward to that. Today is the 6th of March, Thursday. And my name is Chris. First of all, the disclaimer, online material has been developed for a global audience. Please take that into consideration that the info may not be suitable for everyone. To get more information on charting conditions and other details, take a look at admiralmarketsglobal.com. Then also the risks involved in trading for exchange and global financial markets are considered high. It may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So by continuing watching this webinar, you agree with the risks involved and that those are yours, and with the content of this disclaimer. Great. Thanks for your attention. We're going to take a look at Forex trading. After this PowerPoint is finished, let's just take one more slide and then we're complete. Basically, a quick trading plan would be the following 5 steps. Defining the trend, searching for an opportunity, checking if there are filters, establishing the trigger, and then deciding the entry method. With this module, basically the trader at least avoids overtrading or at least jumping into trades based on emotional decisions and emotional imbalances maybe at certain times. By taking this as a guideline and as a model before entering a trade, you've at least established structure of the market, whether there's anything blocking the trade. You have waited, maybe at least had some patience for the trigger to develop or the entry method to develop, and then the likelihood of taking a trade that doesn't match your trading plan or is just taken out of certain emotional disbalances is lower and lower, right? So that's a good thing. Last but not least, take a look at Admiral Markets and social media. Then we're going to take a look at the calendar here, and then we'll head over to the charts as promised. We had Aussie retail sales today, positive. 1.2%. That definitely saw that in the price response as well. We'll take a look at the Aussie and what that retail sales meant for the Aussie in just a second. We have, in 11 minutes, we have some pound news. And we have some euro news throughout the day, some Spanish bond auction, for instance, French bond auction, Greek unemployment rate. And we have pound and euro interest rate announcement. Then we have also USD news throughout the day, plus a press conference for the euro. So it's going to be a busy day, and there's going to be a lot of news announcements. So it's going to be a difficult day, definitely. So I might have to focus a bit on the longer-term charts to get a better feel and direction, because the intraday could be highly volatile and quiet. So let's start. I guess I have it already on this Camarilla pivot point indicator, so might as well take a look at it right now, right here, before I switch to the normal view. So yesterday we had pound dollar. We were saying we need to break above 167. Basically, I think was yesterday's L4. No, sorry, was yesterday's. Now I'm getting confused. Was yesterday's H4? Sorry. And well, we did break above it, that's for sure. Wait, I don't have my drawing tool, 1 second. We broke above that, that's for sure. So it was quite a trending day, right? We broke here above 167, made it up to 167.35, hooked back to 167. That was an ideal spot as a bouncing spot because of the fact that we hooked back to the H4 and used it as support, right? Resistance became support. So that was a good hook back. Now this retracement was pretty sturdy here, but after we didn't break this bottom for half an hour and we got like some sideways movement here, then I knew there was a very good chance of a bounce because of the time factor rule, where if a certain bottom doesn't get broken by 5 to 6 candles, then there's a pretty good chance that we'll get the opposite. So that's what we indeed had, and we made another 40 pip move up, and then we went into a consolidation throughout the New York and Asian session, as we should expect at the end of London session, right? This was 4:30, the end of London, and boom, market is quiet after that. So you can see that the Forex market, of course, is available to trade 24 hours and 5 days, but depends how you want to trade it, because this piece is not something you want to trade unless you have a specific strategy for that. But if you're expecting a big movement, don't expect it in this time zone. So anyhow, that was yesterday, right after we were viewing it somewhere in here, and basically got the break of this earlier trend line here, this earlier triangle to the upside, and then the follow through. That was yesterday, basically. How about today? Today's pivot points, let's take a look. Let's see, we got a breakout all the way higher at H4 here, all the way here above this top up to the next top, basically. That's the space for the trending day. Here's the space all the way down here for a breakout to the downside. And the H3 and the HL3 are showing potential range trades for today. So let's take a look at that. Now, if we break this trend line, I was thinking that's a good breakout trade, but apparently it's saying the Camarilla pivot point indicator is saying H3. So be careful of that, but we might have an upside break above that, so we have to basically break this top. All right. By the way, today's session is oscillator trading, so don't get confused. I will take a look at the oscillator. I just already had this Camarilla pivot point indicator open, so I just wanted to discuss it right now. But we will discuss oscillators, so bear with me here. And let me open your chat so I can read if any messages there. Ah, yes, Hans is saying 1 hour chart. Yeah, this is the 1 hour chart. Yeah. Alrighty. So that would be the breakout scenario here, H3 in this top. And then what would be at least one breakout scenario? The Camarilla breakout scenario basically be H4 up to the H5. So break of that green top there. And we're basically stuck. If you look at chart patterns, this is just a triangle. And we've had a recent up spike. This is looking like a bull flag. So if you look at chart patterns, you look at the 30-minute chart, what do we see? We see a triangle indicated by these orange lines. What else do we see? We see a bull flag indicated by these green lines at the top of that triangle. This is the 30-minute chart. So those are the chart patterns. Now, the Camarilla is saying a break of this triangle basically would mean a downside trade. That makes sense to me. The Camarilla is saying basically if it goes back to L3, that could be a long. Even that makes sense to me because look, if we put a fib on, it will be the 50 fib at the L3. That makes sense. And basically, the upside is saying if we break H3, which is the top, we have a move up to H4, which is the minus 272, makes sense. When we break H4, we have a move up from minus 272 to the minus 618 in the H5. Makes a lot of sense to me. Let's take a look at the euro. Euro dollar wants to break above 137.56. And then we have this 20 pip space. There's not much space here on this euro dollar. You can look at the pivot points and already understand that the pivot points are very close to each other, which means that there's been little movement on the euro dollar yesterday, well, and the day before probably, and the whole week in fact. That's why those pivot points are so close to each other, right? Because those are based on, calculated on previous price action. So if there's not much price action, then the problem is that these pivot points get bunched up to each other. Does increase the likelihood that the H4 will get reached though, because if they're bunched up to each other, then that means that eventually one point the price will kind of like punch itself out of this slower movement, and then there's a higher chance that the H4 and L4 will be reached, and also the H5 and L5 because they're closer to each other, which means the likelihood of such a breakout happening, of course, increases, if you see what I mean. Now, the entire week has been very slow on the euro dollar, so I wouldn't be surprised to see some movement with this interest rate today. If you look at yesterday, it was just a range day. I don't think it even reached the H4, L4. We can't see it today because these are today's levels, but I think, but shouldn't be able to see it, I guess. But Obviously, it stayed within this range, right? It made up, down, up, down, up, down, very choppy yesterday. And this whole week has been very slow. I mean, if you look at the top here, this week's high has been 137.90. This week's low, 137.10, roughly. Only 80 pips. That's very little for 3 days of price action. So back to the, let's say, 30-minute chart maybe here. And, well, in general, though, this is still looking like a momentum move up. This is still looking like a correction. So upside seems still probably more likely. But if we do break below 137.10, there's 20 pips to the downside. If we break above here, there's a few pips to the upside. Alrighty, let's now take a look at euro dollar and pound dollar again, but from a different perspective. Let's take a look at the oscillator and moving averages, for instance. 1 second, as my chart is loading. There it is. Euro dollar. Well, euro dollar, if we look at the oscillator, it's flat. If we look at the moving averages, it's flat. If we look at where price is, it's in the moving average. What does that mean? Total lack of any power movement, right? We went back to the moving averages, bounced off them, went under them, went back to them, flat, 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 flat. I can't emphasize that more. It's as flat as Holland. Holland is a flat country, just in case you don't know. So, geographically flat. So, yeah, not much we can expect here. We really need price to break out of that and show direction. Not only that, not only do we have to break above the moving averages or below it to show some guidance, but then we need to see sideways move and then a continuation. And then it would be interesting. Only the continuation part. Yes, indeed. There's one hill, indeed, Hans. Thank you for that addition. Hans is totally correct. There's one hill in the very southern east part of Holland that is 301 meters. But otherwise, that is, in Holland, that's the mountain. In other countries, that's a very small hill. And that particular hill is probably the exception. Other than that, I think 40% of the country is below sea level, just in case people don't know. A big part of the country is below sea level. And it's protected by raised dunes and other constructions that keep the country safe from the water. Could be up to, I think, maybe sometimes 7 meters or 8 or something, 8 meters below sea level at certain spots. Other spots maybe 2-3 meters. Quite funny. Are you from Holland, Hans? So, you're from the south. Cool. I actually am from Rotterdam. I was born there, and I lived pretty close by to Rotterdam, close to Dordrecht, for 12 years. But I moved away at the age of 24. I am Dutch, yeah. But I have a bit of a mixed background because my dad is a Czech who escaped to the U.S. in the 60s. So there's a bit of a mixed background, but my mom is Dutch. So I lived there but I lived there in Holland though during my formative years. So I feel Dutch, so because that's where I've spent my, you know how important it is when you're 12 to 24. That's really, I guess, when I think you're, formed in a way. So I definitely feel Dutch, although the background is mixed. Let's see. So we got the euro-dollar 4-hour chart, and let's take a look at that oscillator. It's also back to the zero line here. But if you look at the previous oscillators, you can see that we had the upside momentum. Right? Look at this oscillator here. Now that oscillator is weakening a bit, so there could be some divergence, or that divergence has been played out. Why? What is one of the rules on divergence with the oscillator? One of those things that you want to look at is, and that's why moving averages are so good to have in combination with the oscillator, is the fact that if you have divergence, what you could expect from a divergence after it plays out is a move back to the long-term moving average, which is these. And the price has done that already. So let's take a look at the daily now. Daily is kind of showing maybe an ascending wedge potential, or is it a potential head and shoulders? Both could be true. The neckline and support line, in fact, is something like here, right? Extending even further in the past. This oscillator is still above zero line. It's still green. So that would be a bit more bullish. But it's difficult to say. If you look at the lower time frames, it's really tough to call any direction here. I would say both sides are equally possible, because although the moving averages are bullishly aligned here, basically they're flat as well. So I wouldn't hold my breath for either side. I really would like to see a break of this bottom, and then maybe there's a space down to 78.6. That's not much space, only 30 pips. A break above, let's go down to the hourly, a break above maybe these tops in here. Could see some upside maybe to 136, 137.80. But I truly think that if there's anything that we should probably pay attention to the euro dollar today, is just keep an eye on this hourly chart and 30-minute chart and see where's the price action heading to. Because I think that both scenarios make equally sense almost. Maybe upside could be slightly better, slightly more of the trend, but I really wouldn't count on that too much. I think that we'll just have to see how price action responds today. I don't think there's anything that we could say that could give us a clue about a strong preference of the future direction. As I said, slight upside maybe. The key level to downside could be this bottom. Key level to the upside could be this top. Maybe as an interim level, this smaller top here. We need those levels to break. We need to see how price action breaks those, and watch price action to keep an eye on what type of day this could be. Is it a range or trending day, and how far this could go, because it's difficult to say. Let's take a look at the pound dollar. Maybe that has better setup. So 50-minute chart here. Yesterday was surely a trending bullish day, contrary to the euro. Euro pound went down because of that. So we talked about it already, the patterns, fact that it's in a triangle. Oh. Like this. Fact that somehow, 1 second folks, my chart is acting a bit up, it's acting a bit strange. One second, just give me a few seconds. I just have to remake this template because it wasn't proper. Okay, so I'll draw those lines again. So we have the chart patterns, the following chart patterns, right? We have this triangle. Yes, indeed, Hans, it is a bull flag. We got this triangle, and indeed the bull flag. Let's go back to the 15-minute chart. Okay, got a new template. So we have this triangle, but we also have this bull flag at the top of this triangle. Now, although that looks like a bull flag, and it is a bull flag, the only thing is, what I don't necessarily like about that bull flag is that it's at the top of a triangle. When a bull flag is in the top of a triangle, then it has a bit of a less value. Why is that so? Because if we break this bull flag, then very close to it is the top of a triangle. So even if we break that bull flag, within a few pips, we're running into a next resistance. So that's what I mean with, yes, it is a bull flag, but it has less value because of that. Let's see, I missed some questions earlier on. I had the chat incorrectly set up as well somehow. So I missed Aurelien's question. It's a pattern of a triangle with low highs, same lows. Let's see, are you talking about for the euro dollar? Okay, let me go back to the euro dollar. Sorry, I missed that question. Low highs and same lows. Yes, in a way, indeed, although this low is kind of breaking that, but to a certain extent, I see what you mean. There's this level here, and we're getting kind of this downside momentum like that. It's not a very neat pattern, but there is that the descending wedge, it's called, element to it. So, yes, I see your point. And in that regard, the descending wedge would say that this level is important. 137.20. Yeah, break of that level could already be an indication that we could get some bearishness, but I would be careful. I wouldn't trade it upon the break of 137.20. I want to see more confirmation, to be honest, especially with the euro interest rate. I probably won't even trade it today with the euro interest rate. But if you want to trade it, then that's what I would do. Is wait for some guidance, wait for the break, see if we get a sustainable break. But I see your point. 137.20 is a key level. If you look at my wave analysis, I don't want to bore you here with the wave analysis, but the funny thing is, it's funny you mention it because 137.20 is an interesting level because I started to put a level here at this top. Let's see, right here. You can't even see the entire. 1 second. Oh, sorry, I got rid of it now. Oh, anyhow, this was a top, became support, then became resistance, became support, then became resistance, then became support, and that's exactly that 137.25 level. So it's funny you mentioned it. That's kind of like an in-between level that is used as support and resistance at various spots throughout the last week or two, I think. It's kind of funny. So it is an interesting level, but I don't think the downside has much space, so I want to see how it breaks because you can see if it moves down, you have this support line coming in. So any downside, we're bumping into that trend channel. On my Elliott wave chart, I said I want to break it below 136.82 for really a downside trade. And I want a potential smaller upside here maybe, but the real upside trade is here. So that's what I had on the Elliott wave charts. For those of you who like that, that was released this morning, or posted this morning, I should say. And I always add arrows if I like a potential breakout. And I always focus on breakouts because then we have clear trend lines as a trigger that I look for. So anyhow, so that would be interesting, but still want to see more confirmation. Look how flat this hourly is. It's quite funny. Back to the pound. So that's what I don't like about this bull flag. So break of the triangle, I think would be better, but a break of to the upside seems more likely because of that bull flag. It's just that the market structure looks bullish. It's just that there's a difference between, of course, the market structure being bullish and necessarily, when do we trade it, of course. So this does look bullish because we have price above the moving averages at the moment, or for a big part of yesterday. So we could see that follow through. I wouldn't be surprised to see that follow through and a break of the triangle to the upside. In this case, the euro dollar looks a bit more wishy-washy. The pound dollar looks more structured to the upside. And let's face it, we did have this strong momentum up. This is looking corrective. So at one point or another, one would expect finally the upside to continue. We've had already previous attempts here, pullback, here, pullback. So we don't know for sure if this will happen now. Maybe we pull back one more time and bounce again off this level and continue in this triangle and then finally break or even break to the downside, right? So this triangle is important to keep an eye on how long this consolidation can last, and when finally we can break, and whether we get a established break, whether we get a good break, not a false break. That's something that still remains to be seen. How do you look at that? I want to see angles on the moving averages, for instance. I want to see clear price action candles above it, for instance. And maybe oscillators you can use. For instance, this AO, right? So let's take a look at the AO now. You look at this 4-hour world, and you can see, to me, this was a very big upside. This was a pretty big, strong downside too, by the way, but it was matched by an upside that was stronger, plus the fact that we are in a daily uptrend. Let me show you. If you had any doubt about the trend, look at the price versus the moving averages. The moving averages are pointed up, and the price is above them, but also look at the oscillator. Oscillator is always above the zero line, which means bullishness, right? Confirming the trend. And anytime it dipped below the zero line, it was weak, just a bit, right? Just a bit below it, and that was actually retracement. If you compare the top here to the low, if you compare the oscillator rating above the zero line to below the zero line, obviously you can see that the oscillator rating went a lot higher than the oscillator rating went lower. So there's a lot more bullishness since summer 2013 on this daily chart. Again, the oscillator is still above the zero line. The oscillator is actually showing a green histogram bar at the moment. Let me zoom into current price action. I mean, really, like, as much as I can. Oh. And this is what I mean. You see, this is today's candle's looking green, but we don't know. That's not confirmed yet, actually. Let's see if today can indeed post green. But in any case, this is a strong move up on the daily. Good momentum here. Oscillator is up, so it's all bullish at the moment. It's just there's a big choppiness here. Those things can take long to play out. I actually don't use any levels for the AO. I know that sounds maybe funny. What I actually do is just compare those tops and bottoms. That's all, in fact. I just visually look at how high it is compared to how low it is. I know maybe that sounds funny because normally oscillators do use levels, like a CCI or an ADX. If you want to use levels, then I would advise to use those. But this one doesn't have RSI, have specific levels. Here I just look at relativeness. But I guess let me take a look at what this level is. It's 0.034. I don't know if that really means anything. Let's take a look at the euro dollar. This is 0.02. So the pound dollar moved up a lot more because 0.02, let me show you where 0.02 is on the euro dollar. You see this red line here? Or let me make a different color. This purple line. That's where the euro dollar topped out on this daily. Just below it, right? Those are the tops of the daily oscillator here since summer 2013. The pound dollar went higher a couple of times, as you can see. So maybe it's a good idea to look at the levels, but I always looked at it relatively within the currency. Went up twice, 3 times higher. And the euro pound, of course, has been moving down, so that explains it. So let's take a look at the 4-hour now. And I have a personal AO strategy. If you want to know more about that strategy, I'll show you where you can find the webinar. Go to webinars, admiralmarkets.com first of all, of course, then go to education, go to webinars, then go to video archive. And let me see, I think it's the 30th of January. That's not it. Let's see. we had a webinar on the 12th of December. I think that's where I discussed the AO, but not the strategy itself. Let's see, how to trade using classical indicators, 18th of July. I don't think that, thinking where I mentioned that strategy. Here. This one, intra-week 4-hour strategies, 13th of June. Take a look at that one. That mentions a strategy specifically using the AO for the 4-hour world. So if you're interested in that, take a look. Okay. Now I lost it again. Where is it? Yeah, here, 13th of June. Goody good. So let me head back. By the way, this week is going to be over soon with the webinars. We have still one more left, though. It's on discretionary trading, so that will be tonight. Hope to see you then. Next week we'll have the same mixture where Tarantula has Monday, Wednesday evenings, basically his webinars. Thursday evening we have one shared one, and then the live trading webinars in the mornings on Tuesday, Wednesday, Thursday. So there's 6 in a week, right? Monday, Tuesday, Thursday evening, and then Tuesday, Wednesday, Thursday morning. Alrighty. Let's see. No problem, Alexander. Good to see you here. So we're taking a look at the pound dollar, and we see a strong daily upside and a strong 4-hour up momentum too. And I haven't talked about it for a while, but that strong momentum happened after we broke. You can see the classical support and resistance kicking in, strong momentum, bull flag, break of the resistance, because this level was very key, 162.50, 163, because there are a lot of resistance levels. I don't want to bore you here with all details, but there are multiple reasons why that level was important. Price broke through it. Price broke through it, hooked back to it, bounced off it. So you can see resistance becoming support. And now, after that bounce up, we had strong momentum, and now we're in this triangle. So let's go back to the 4-hour, right? Strong momentum, consolidation, sideways movement. In a momentum, what are key characteristics of momentum moves? The candles are mostly aligned to one direction. Is that so in this upside? Yes, it is. Oh, lost my chart there. 1 second. Yes, it is. Most of them are bullish. There are only a couple of bearish ones, right? If we would count them, let's do that quickly then. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. It's about 2 to 1. Okay, roughly speaking. So 2 out of every 3 candles is bullish. It's not bad. It could sometimes even be better, to be honest. But so largely price action here bullish. That's one key of a momentum move. Okay. The other one is that mostly a lot of these candles are close to the high, right? The close will be close to the high, which mostly is true. You can see that there's some wicks on the bullish candles, but mostly are pretty bullish. Also, the bullish candles should certainly be, in an upside, of course, upside momentum, the bullish candles should certainly be bigger in size than bearish ones, and that's absolutely true, right? Look at these. Even though you have a couple of bearish candles, they're hardly bearish at all. I mean, they're so small. They're so small. They're so small. I mean, if I put a dot on them, they just disappear behind the dot, if you know what I mean. Look. Well, if I put a dot on the bullish candles, you can clearly still see those candles, right? That is characteristics of a momentum move. However, if we see now this move, how does this look like? Well, it's a mixture. It's a mixture of bullish, bearish. It's a mixture of close, mixture of wicks, no direction. There's some direction within these ups and downs. I'm sure that if you look at the 50-minute chart, there was a good upside here and some good upside here. But on this 4-hour chart, it's just a mixture of everything. So this is consolidation. It's a range. Okay. So anyhow, if you look at this 4-hour now and look at the oscillator, we have a very strong oscillator reading. And to me, there's normally speaking, statistically speaking, there's a good chance of breaking this top. Also, anyhow, to go back to my strategy, I got diverted there. Sorry for that. My strategy says if you have a very strong AO reading like this, and that is relative. So that's a bit discretionary. If you break the first fractal, then you have an 80% chance of getting 1-to-1. Well, this one failed, so that was one of the 20. This one is doing better. Let me take a look. Oh, we already actually reached that 1-to-1 actually here. So that one succeeded. So we have now about, let's see, I have to think of the statistics again. 1 second. Let's see. Well, there's a 60-40% chance to get 2-to-1 from here, but I'm trying to calculate what the chances are after reaching 1-to-1. Yeah, okay, it should be about 75%. Sorry, I just had to do some math there. To get to a 2-to-1 R2R. So that means the entry is here, the stop loss would be below here. Take a look at the webinar so that you understand this fully. But it's the first break of the fractal after there's two things. Okay, sorry about that. I'll just explain it, otherwise it gets confusing. We have a strong AO reading, we have a move back to the 0 line. We have the first break of the 4-hour fractal, that's the entry, plus a stop loss below the low. And then there's an 80% chance to get a 1-to-1 R2R and a 60% chance of getting 2-to-1 R2R. And once we reach 1-to-1, then there's about a 75% chance to get to 2-to-1, which means at the moment there's a pretty decent chance, that's what I want to get to, that we can get to 168.50. So I would think that any dip down would bump into support at the bottom of the triangle, and any breakup should see some follow through finally to the upside. Will it happen this week? I don't know. We have a euro pound, a euro interest rate, and we have NFP tomorrow. Those events could throw away all these statistics out of the window, because the market will respond to those. No matter what my statistics say, the market is going to move, and they're going to react to those events, because they are very key. They're key events. They're very, very important. So, but anyhow, the structure looks bullish to me. It looks like a momentum up. As I said, we have a strong momentum up here on the AO. We have a pretty big retracement here. And we have a typical consolidation. So we're making a triangle. So the most logical would be to have a breakout of that triangle for upside continuation. How far could we go? Let's put a fib on top of this, from top to bottom. From bottom to top, to be precise. We bounced off the 38.2 fib. So the target would be, if we do break out of this triangle to the upside, is 169.78. That's the first target. There we also have, of course, the psychological round number of 170. Then after that, if we, for instance, move up, make a bull flag there, and then break again, we can see it's further gains up to 171.70, for instance, which is the minus 618 target. So these are key levels, as you know, for the market. This is how the market moves. They use these levels. So back to the hourly, and I would say that on the hourly, this is actually looking like hidden bullish divergence, because we have a higher low here, but we have a lower low here. So to me, that looks like hidden bullish divergence. So in a way, it doesn't surprise me we had a bounce here. I failed to see that yesterday. Sometimes don't catch every single thing either, but logically, but that wasn't, didn't see that, but that was indeed hidden bullish divergence. Anyhow, we had a pretty good AO reading here, getting a retracement now. 15, yeah, nothing to add at the moment. I think the Camarilla also said looking for a break of 167.40, right? So I would want to see basically some clear hourly 30-minute guidance, some clear break above it, and hook back and go. All right, if you have any questions, let me know. Otherwise, let's take a look at the odd USD. Yesterday, we were saying, remember odd USD, we were saying in here, this could be a bouncing spot up to the next resistance for a small upside trade. So that panned out nicely. And indeed, we got about 30 pips or 40 pips upside. Let's see here is about 189.60. We got up to 89.30, yeah, about 30 pips. Then we got again down, and we bounced up again, and we were stuck in a triangle here between support and resistance, right, in this triangle. And the news event on the Aussie blasted that triangle to the upside. And we got a very strong AO reading on this 50-minute chart, right? If we look at that power AO, very strong. And that AO has retraced to the zero line, or almost, very close. And we're actually breaking already. We're breaking as we speak of this smaller bull flag, in fact. Let's take a look at the hourly now. So with that said, as I said yesterday, we got some smaller upside to that triangle. If we break that triangle, we can see extended moves up. It looks like that's happening right now. And we do have to be careful, though, of this upside in the sense that here's another resistance level. It's still a while from here, though. It's at 90.80. If we break 90.80, then we zoom out again to the daily chart, and you can see price stopped at the 38.2 fib. If it breaks that fib, then we have a space up to the 50 fib at 92. So that would be the upside potential. So back to the lower time frames here. So we know that above this red line we have space to 92, and now for the moment we have space up to that red line most likely because we broke out of the triangle to the upside, so we can see follow through. So to me, any dips down here could be good buying opportunities up to 90.80. About 70, if we dip down to 90.10, it could be 70 pips up. So that is looking bullishly aligned and bullishly structured at the moment. Pound odd is also the opposite. It's bearishly aligned at the moment. Also, big fall yesterday. Looking at this 50-minute chart during the news event of the Aussie, you can see, boom, big fall of this trend line, big break of this trend line. Here too, we're getting a good momentum down. Now, the euro and pound, of course, have interest rate announcements, so I'm always careful with those, the interest rate announcements, but I don't like trading on those. I don't like trading on NFP. So today and tomorrow are definitely not my favorite trading days. Sometimes I even take days off on these days, or I go to the barber or dentist. This month, I don't have that scheduled, so I might take a look, but out of the whole month, these two are not my favorite days. But with that said, the pound odd is looking, and probably euro odd too, is looking like we got a turn here. You can see, look at when we had a clear upside move. Price was above the moving averages, right? Very nice, very clean. But then price started to move back. Even the retracement was clean. But then when the moving averages were trying to cross, you can see how choppy that was, right? A lot of choppiness, just like here. And it seems like we're breaking out of that choppiness to the downside. But I want to be cautious with saying that, but it does seem so. Let's see, the 4-hour world. We had divergence between these tops here. We even had daily divergence. So with that said, there could be a potential retracement down to the blue moving averages here at 178.80. How do we know that we can get that far? We would basically need to break the support. And where's the support at the moment? It's here. If we break that level, then there's a decent chance to go down to retest, first of all, this bottom, and then second of all, down to the blue moving averages. Specifically the minus 272 at 178.40. So I would say below 184 we got a decent space to the downside like this. Below 180.120 we got a decent space down to the minus 272 target, and maybe, just maybe, even a bit of a further extension. But that's, I would say, a bit too far to look ahead that far. If we don't break 184, there's actually still a potential to bounce. And we could see, I would say bounce would need to break about this level, 186.50, above the moving averages again. Because look, the moving averages are still green and blue, which means bullish structure. Above this top then, and then we would have this top again as resistance. Those would be spaces to the upside, I would say. So that's the daily perspective. Let's take a look at the 4 hour now. And we can see upside momentum, consolidation, upside, retracement. Is this a pullback for more upside? It's still possible. If you look at this 4 hour chart. Despite the bearishness on the lower time frames. So now down to the hourly. And you can see that although we got the bearish momentum here, that it's still questionable if we get a lot of follow through if you look at the higher time frames. There could be some downside here, but we have to be careful of this support here on the left at 144 because that could be a bouncing spot. For the moment though, if you look at the 15 and the 30 and the hourly chart, then you can see this downside break, you can see this slow retracement, and therefore some downside continuation it seems likely. Now, where would you want to enter? It depends if you want to trade this. Maybe the odd USD could be better because we don't have any interest rate on the odd USD. So personally, I think that's better. It would be to look for dips down here, back to the moving average, back to retest this bottom. Let me take a look at the hourly. The very best would even be a dip down to, for instance, the 61.8 fib here and the broken triangle. I'm not sure if you can get that far, that low. That would be probably the best one. The pound odd, yeah, has a disadvantage of the pound news announcement, but if it does spike up because of the pound news, we are bumping into resistance. That could be an interesting spot for downside. If it does spike down, then it's difficult to trade because of the news event, I guess. But it seems like we're trying to break through this smaller bear flag as we speak. But as I said, I'm careful with the euro and pound. Euro odd is the same. It broke out of this uptrend support line, this green one. Sorry about that. It broke that green line to the downside and is also continuing with this bearishness momentum. And you can see it took time, but eventually price broke below the short-term moving averages. Those got red, then price used that red as a resistance, then broke below the long-term moving averages, and we've been staying underneath these red moving averages ever since, and this trend has continued for the downside. And if you look at this euro odd, like this, actually what you see is a potential 5 wave here, and this could be a correction of that. to the 61.8, and we could see a downside break. What we've also broken already is this support level, as I said. Let me put that back on. So with that break in mind, I would say we're pretty close to getting a bearish continuation here of a reversal or retracement. That could mean if we break below 150.180, we could see maybe the potential for these boxes to the downside. So that is possible. I wouldn't say we're quite there yet. We're very close to, definitely looking so. In that case, if that break would happen, we could have a potential head and shoulders like this. I know it's not equal. This level is a bit higher than this one, but it's roughly like a head and shoulders. There could be some odd Aussie weakness, strength coming up in this case. This has a pretty strong down momentum too, right? There's a momentum here as well. Also, if you look at the time factor rule that I use, we haven't broken this top 1, 2, 3, 4, 5 weeks. So looks like we're going to get a bigger retracement. And if you look at this weekly chart, then in that case, if we break last week's low at 150.180, as I said, there's a potential next week, probably next week, because this week, don't forget, we could basically, this is already a pretty big candle, so I don't know how much juice is left in this week, but there could be some downside left, maybe to about this level. Then next week we could see a retracement of this week's candle, and next week we could see maybe a bigger downside extensions. The gap, though, the spaces I'm talking about is below 151.80 up down to 140, 149.80, 150, then below 150 to 147.50, then below 147.50, down to 144.50, right, on this weekly chart. Yes, time factor rule, for those of you who don't know it, I look at the number of candles that hasn't broken the top. If it's 5 to 6, then the likelihood of that top being broken is smaller, and the chances of a bigger retracement lasting more than, I would say, more than 12 candles is increasing. Now, it's of course just an estimate. I'm sure you'll find it's just a statistical probability. It's not always so. But I would say it does a decent job of getting an idea when a certain impulse is over. For instance, here we see every high of the candle gets broken, which means we're in ongoing momentum. And then we have a couple of candles that don't. 1, 2, 3, 4, 5. That means that momentum from the blue circle to the blue circle is over, and we should get a bigger retracement. Now, it did happen. Not that big. We got a couple of candles more. But in total, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles before we broke this top. So 13, 14. So if it took 5 to 6, it becomes a real confirmed top indeed. And it will last, the consolidation will probably last 12 or more. Sometimes I would say there's a higher chance of it lasting 20, but you can see sometimes it's less, like this. It even works on a 5-minute chart, although to be honest, I would be a bit careful with the 5. And if you don't have a break at the bottom or top by 5 or 6 candles, we'd be more careful that we could still see one more break or one more break at the top or bottom, especially if it's early within the London and New York session. Alrighty, folks. Just taking a last look at the zero odd here, seeing if I'm anything want to add. Not at the moment. Could be interesting, in the upcoming days. Other than that, let's take a look at the dollar yen. Dollar yen is right at the resistance. We had a breakout trade above orange up to the resistance. We're right at the resistance. So let's see. This could be a break or bounce spot. A break to the upside could mean a potential for the dollar yen to move up to this resistance line. And if we put a fib on this upside from the bottom to the top, we can see that the minus 272 target is at 103.35. A break above that, it's minus 618 target, then minus 1,000, etc. Those were the spaces to the upside. Now, if we don't break, then there's a potential, of course, to bounce, either make a bull flag and then still break to the upside, or move back all the way to the bottom here. So I'm still in the waiting mode on the dollar yen. Dollar CAD broke to the downside out of this triangle to the downside here, which means that which means there's a potential for more downside, right? We had this triangle here. We could at least go, for instance, to the 886 fib if I put a fib from bottom to top, which is around 109.40. But be careful of the 786 fib as well, right? Let's take a look at the hourly and 15. Yeah, that was looking bearish. Now, wouldn't necessarily say trading it here would be the best. Could be good to wait for retracement first, for instance, back to about this level, around 110.70. We could put a fib on this down move like this. And if we're going to hook back to the 50 fib, for instance, at 110.70, then that could be an interesting level to look for shorts. Kiwi is moving up higher as well. Kiwi had a good impulse here. This was a correction, now getting followed through to the upside. Let's see. This had some breakout trades, although it was very choppily moving up. Let's take a look at the 15. This is the 50-minute chart. Sorry for that. Let's see. This is an ongoing momentum. So it's been traveling and it's accelerating away from the moving averages, which means that trading it right here, right now, is kind of like jumping in pretty high. Would rather wait for a pullback, for instance, to these broken tops. That would make more sense. Or even to retest this bottom. Let me take a look at the hourly. Either somewhere in here would be a good retracement. Otherwise, it's quite extended already. I mean, not that it couldn't continue, but the reward to risk is a bit not in balance. Euro yen and pound yen are interesting because we are breaking above this triangle to the upside, so we could see maybe that upside potential trades from now on up to maybe next week on this euro yen. Pound yen is doing the same, so we're getting some breakout trades to the upside. Now, personally, I would be looking for pullbacks within this uptrend. So what I'll be looking for is a pullback on the hourly to, for instance, first of all, I want to see how this breaks, and then if it breaks something decently, then I would like to see pullbacks to the moving averages. Same for the pound yen. Pretty nice bull flags here. What else? Let's take a look at dollar Swissy. Bouncing again off the support line here, roughly speaking. You can even change that support line maybe to something like this. Looks like a falling wedge to me. Not too interested in Swissy personally at this moment. Let me see. Anything else I'm missing? No, not that I know of. Let's take a look at pound dollar. Let's see. Alexander and Amdadul are looking at that. Let's take a look. Or are asking about it. So, basically, triangle, right? Bullishly triangle because of this previous momentum to the upside. This is looking like a consolidation, which means if we break the triangle above the triangle, we can have a breakout trade to the top, and then if we break the top, then we have a breakout trade to the minus 272, which is a 169.78. That would be the upside breakout scenario. If we break the bottom of the triangle, we could go, we test the 38.2 fib at 166, and then maybe the 50 fib at 165.36, which would be the space to the downside. Personally, I'm looking at upside. I don't trust the downside too much. We could have intraday shorts. I wouldn't take a swing trade though, because I would be afraid that that the downside could still bump into support. And what could happen that after some intraday momentum down, we bump into support, and the next day the mentality, psychology changes that we get upside. What I mean is, for instance, let's assume we get some intraday downside after a break of this triangle to the downside. Trading that throughout the day, trading that intraday downside after we get a break, pull back and go could make sense. But I would want to exit before the end of the day, because after consolidation, after the end of the London session, the currency can go into some consolidation, and then the next day you could see reverse and then move up. So I wouldn't want to look for swing trades. The upside is different. The upside shows a lot of space potential. It has space here, it has space here. Those are pretty big spaces. Plus, we're in an uptrend on the daily. Plus, we have this momentum up. Plus, we have a consolidation to the sides, to the sideways. Therefore, personally, I would rather wait. I would rather swing trade this upside, because if we break the purple, there is a potential for further gains. You could trade it intraday, but there's definitely also swing trade potential there because of the space. So I like the upside, therefore, more. And but do we get that? We don't know, of course. The price will tell. We have to see and wait for that confirmation first of all, because that's what can happen with triangles. Price can stay within those triangles for longer than we think, and could take time. Although the triangle is getting, of course, narrower as we move forward. Yeah, no problem, Alexander. Glad that you like that. I found that interesting. Hans is asking. Sorry, we already talked about that. Actually, Amdadul is asking. When am I going to be sure about that? Well, look, confirmation is always something that is good. How you find confirmation is something you have to develop yourself. I use trend lines and price action, and moving averages and fibs to get a feeling for an analysis, I should say, for when I think the trigger and confirmation is given. What I don't like about this, the purple lines are the triggers, but I wouldn't enter necessarily upon the break of those. What I would like to see is a 50-minute move, finish outside of it, and I would like to see kind of a correction, a mild correction up, and then the next break I would like to take. If that's a bit subjective, and it's something, I mean, in the sense that it's difficult to know when that exactly is happening. So one thing you could do is use the pivot point indicator. For instance, take a look at the Camarilla. I use chart patterns, but and momentum to gauge that. But one advantage of using, for instance, a Camarilla is that it has levels, clearly defined levels. So waiting for the break of the L4, for instance, and a hook back to the L4, that's what I'm kind of meaning. When you get back to the L4, then and you haven't hit the L5 yet, then you have that potential to move like that circle there, that space there. That's kind of the space I'm talking about. Now, what I kind of meant is that if you break the trend line, what you often see is a break and pullback. So I'd rather wait for the pullback, the break, pullback, and I would rather wait for some price action like confirmation signal here at the blue circle for that downside. Yesterday maybe was a good example. Yesterday we had, for instance, if we look at the 5-minute chart, right? Yesterday we had this upside. Let me make that green. We had this upside. Did I trade that? No. Did I trade this downside? No. What I was looking for was a break, right? A break of this trend line was an early one. A hook back to it was the confirmed one. And when we didn't break, basically, this bottom here for a while, then I knew somewhere in here, I think here was the first time I was a bit more, the first time that let's see, let me count the candles to be precise. 1, 2, 3, 4, 5, yeah, 6 exactly. I waited a couple more, somewhere in here. Then I knew that the chances of this downside retracement, that they're over, that this downside retracement is finished, was pretty decent. Right? We already had this momentum. We had a bullish breakout here. So the chances of getting support here for some upside were high. So there were a couple of ways of trading it, but one of those was a breakout here, or the 50 fib, or the bounce off the 50 fib here. Or even earlier, the bounce off the triangle, but that's a different trade. So how about this morning? Basically some ups and downs, nothing yet substantial, just like yesterday, right? Some ups and downs. How about the euro? By the way, if you have any questions, let me know. I guess I've talked about things that I wanted to share with you that I found interesting. So if you have questions, specific questions, let me know. Otherwise, I guess if you don't have any questions, we'll be wrapping it up. Euro dollar, very choppy as well at the moment. All right. Let me go back to my original charts. Let's see, I got a question from Amdadul. Do you mean you wait for the 50 fib? Well, it depends on the structure. I know that's an annoying answer, but a 50 fib is always a decent spot indeed. Yeah. But you could get deeper retracements, right? Yesterday, 50 and 61.8 were ideal levels. I didn't expect much more retracement necessarily because, why? Because we already had a decent upside momentum here. And I didn't expect a bigger move down in the 50 or 61.8, indeed. But in some scenarios, in some moments, I do expect a deeper fib or even a shallower one. So that depends from case to case. It depends on that, what it depends on. That would be a bit difficult to explain here. It's a bit of experience, I guess, that is needed. It also has to do with a bit of wave counts, impulses, structure of the market. For instance, you can see with such a big up move, right, that we stopped at the 38.2 fib. We're in a trending mode, so that doesn't surprise me. The shallow fib was used. Sometimes you get deeper hookbacks, right? For instance, within a triangle environment like this, it doesn't surprise me that we move back to the 78.6 fib here. But in any case, fibs are best used when trending, right? When there's a consolidation, they're actually not that great. And they could actually be, in some cases, dangerous, if not, if used in the wrong moments. In general, though, what happens is that if you have wave counts, if you have a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5, like this, typically a wave 2 is deep. Typically a wave 4 is shallow, which means wave 4, the 23.6, but primarily the 38.2 are the most important, and a bit of the 50. For wave 2, it's more the 61.8 and the 78.6, and even the 88.6 are important. For intraday trading, wave counts have become less important, in my opinion. Could still provide guidance, but for intraday trading, I think that basically what you're looking at is just what is the directional movement of the day. Is it trending? Is today trending or is today ranging? The pound dollar was trending, and because it was trending, then the 50 fib was a pretty decent level. The euro dollar wasn't trending. The euro dollar, if we look at the 15-minute chart, was chopping around. So it doesn't make sense to use fibs on yesterday's movement. It doesn't make sense to go down to 15 or 5-minute chart and say, okay, I'll put a fib on this downside here, because it doesn't have any value. You see the tops get broken. It's just a range, just like a sideways zone here. It doesn't make sense to put fibs on yesterday's euro dollar price action, but it does make sense in the pound dollar, because we got a directional move here. It was a trending day, so the 50 fib did provide a bounce. We didn't go to the target exactly. Why? Because we're in a range and we stopped at the top of this triangle. But it did provide an intraday bounce because it was a ranging day. All right, folks. Well, I guess that wraps up for today. Let me take a look at the hourly quickly. Hourly got some bearish price action, but still within the bull flag. I think that with the interest rates, there could be little price movement. There's that chance. So it could be a slow day until we get those announcements, and then we could see the usual volatility connected to those announcements. That would be typical for today and tomorrow. Let's see if those news announcements drive this currency structurally to the upside, which is, I would say, for the pound dollar, it has a bullish structure. Or will we see a retrace back to support? / will we bounce off that and or break? Those are the questions today. Let's see what we get. So thanks for joining. We'll be back tonight at 5 p.m. GMT or 6 p.m. Central European time. I hope that you can make it then. We'll be talking about discretionary trading, which is something that we almost always use in this trading room, right? Maybe one day I will take a look if we can make some non-discretionary trading systems, webinars, sorry. But that could happen, but it would take still. I'm working on a system that is very is exactly non-discretionary, to be precise, but that hasn't finished. I think it still takes some month or maybe 2. Let's see. All right, folks, have a great day. Cheers.